Today we're going to be answering a very simple question actually. How does BTCI perform in a bear market? Is it going to outperform just holding Bitcoin in an upcoming potential bear market as of November 17th? Look at this video. Let's check out BTCI and its holdings, and we're going to be doing some back tests to answer this question. As usual though, none of this is financial advice. I'm definitely not a financial advisor.
Knowledge.
Now, if you don't know what BTCI is, I have a bunch of videos already on that, so go watch one of those. We're just going to do a short recap. BTCI is a fund by Neos. It's a high income ETF strategy that sells covered calls on Bitcoin, the HODL token. So you get about a 28% distribution rate, almost a 1% expense ratio, and this pays monthly, a monthly distribution because of the covered calls. So if you know anything about a covered call strategy, you're limiting your upside with the covered call in exchange for premium, but also for that, if we're about to enter a bear market, if Bitcoin is going to trend downwards, we're limiting the upside, but there's not much upside potential, so you're collecting income. So first, let's look at backtest portfolio visualizer. And I tested this from January 2025 to October 2025. Now this doesn't include November yet because November is not over, so I can't do it for the month of November. But really, Bitcoin has done nothing this whole year. So let's look at these results. So first portfolio is BTC, market price. We put in 100%, $10,000 in January 2025. And then we have our second portfolio, BTCI, which is 100% allocation, 2025. And this is with dividends reinvested. So we're not withdrawing that distribution. So what are the results? Since January 2025, we can see BTCI has outperformed in every period since Bitcoin has really been doing nothing. And here it is. You can see BTCI in the green is at $12,093 at the end of October 31st. BTC is at $11,726. So BTCI is outperforming Bitcoin by a small margin, but still a margin nonetheless with dividends reinvested. We can see there is over here, BTC, BTCI, a higher return, 20% versus 17%, and a lower maximum drawdown, 19 versus 17%. Now, this isn't including the current dump we're in on BTC. If we take, let's go to the BTC chart. Currently, at the time of this video, there we go. Bitcoin's at $92,000. It's pumping pretty good, or it's dumping pretty good, I should say. So we're pretty far off the high, about 27%. So how's BTCI done since Bitcoin has not really done anything? You can see since December, we're actually below our current price a year ago and in January. So it has just been up and down volatility, Bitcoin not doing much. And so far, the backtest and portfolio visualizer says it's going to do better. How can we see this on TradingView? And I'll show you. So if we put here, and let's put BTC on the overlay. Now we have Bitcoin and BTCI price. And you can see if we bought in November with the huge pump, BTC has outperformed. Let's go from the daily. Let's make our starting point here in about January. You can see BTCI down 7%, Bitcoin down 11%. If we had our initial position here in June, BTCI 12% negative, Bitcoin negative 15%. Even if we bought right at the tippy top, let me get rid of this. Let's say we bought right at the peak. There we go. BTCI down 9%, BTC down 9.36%, and with the upcoming dividend in November, I'm assuming it's going to be less. So over the past year, BTCI has actually outperformed. Why? Because Bitcoin has been not doing really anything. It's just been chopping sideways, up, down, lower highs, lower lows, and it's been going downwards. So over time, this bear market, there's a high chance BTCI, the Neos Bitcoin Income Fund, is going to fare better, is going to do better, have less drawn down with the dividends reinvested. If you don't reinvest the dividends during this time period, you're just eroding your cost basis way lower. You can see if we bought, let's go to January, Bitcoin, you're down 13%, BTCI, you're down negative 28%. That's without dividends reinvested, because remember, with covered calls, you're limiting your upside potential, so it can't go as high, it can't recover as hard. So if you want to buy this position, make sure you're reinvesting dividends. I think it's a good time to get a low cost basis for a really high paying asset that has shown to actually recover. But we know if Bitcoin's going to dump, both are going to fall along with it unless you're reinvesting the dividends, as this backtest shows here. Over the past year, BTCI has outperformed, and we can even do another video towards the end of the year and see how it performs if it's still a bear market or choppy consolidation, whatever. So overall, I am bullish on BTCI with dividends reinvested. I think it's the best fund so far. I think it's going to do well in a bear market. Again, I'm not going to go super heavy now. My plan is to DCA in over the next year and build a low, solid cost basis with a fund that's potential to recover and pay me a nice 28% dividend. If you're wondering why I chose BTCI out of any of the covered call funds, check out the video right here. If you'd like a deeper dive into BTCI, check out this video right here. God bless, guys, and peace.